Since 1971, when money stopped being backed by gold, inflation has eaten away your savings every single year. Now today, I'm going to walk you through the gold standard, how banks broke it, and why fiat money is built on nothing but promises. Now we're going to cover crashes from 2008 to COVID, and why central banks are hoarding gold, and why silver could be your biggest opportunity right now. I'm James at Blackwell Jewelers, and I promise you'll never look at money again the same way. Now, before banks, before paper notes, and before governments printed promises, there was gold. And for thousands of years, gold was money. Now why? Because it worked. It was rare. You just can't, dig it up anywhere, and it doesn't rust, it doesn't rot, it doesn't vanish. And you can't fake it with ink and paper. If you held it in your hands, you knew you had something real. And that is why people trusted it. That whole idea of money is built on trust. And gold was the one thing everybody trusted, no matter where you went. Now that trust is what gave rise to the gold standard. Every banknote once was banked by real gold in a vault. Now you could walk in with that note and demand the gold that was behind it. And that worked for centuries because it kept governments and banks honest. Gold wasn't just wealth, it was money. But here's where the story changes, because once banks realized they could issue more notes than gold they actually held, the cracks began to show, and eventually they broke the system. Here's where the game changed. When banks and governments decided to break their own rules, the gold standard was simple. Every note in circulation has to be backed by real gold in a vault. If too many notes were printed, people could walk in, hand over the paper and take the gold. But governments soon realized something. They could print more notes than the gold they had. Most people never redeemed their notes anyway, so who would know? Now at first that worked. They pumped more money into the system, borrowed against the future, and funded wars and projects. But it was built on dishonesty. Money backed by promises, not metal. The final break came in 1971 when President Nixon ended the gold standard for good.
Time has come for a new economic policy for the United States.
From that point on, the pound, the dollar, the euro, every major currency stopped being tied to gold. Since then, money hasn't been real wealth. It's just paper or digits on a screen with no anchor. And once that change happened, inflation became a permanent feature. And that's the system we still live with today. Money that's not backed by gold, just promises. And those promises are getting weaker every year. Now, since 1971, money hasn't been backed by gold. It's been backed by promises, and those promises get weaker every year. Paper money today is what's called fiat currency. Fiat just means because we say so. A £20 note is only worth £20 because the government and the banks agree it is. There's no gold behind it, no tangible asset, just trust. And the problem is when you can print money at will, you destroy its value. That's inflation. Your savings buy less every year, not because of food or fuel suddenly got more valuable, but because the money in your pocket got weaker. Look at the last 50 years. Housing, energy, food, cars, everything has skyrocketed in price. But gold and silver, they're simply reflected in the fall in paper money's buying power. Paper money is just a promise. Gold and silver are proof. And that's why people who understand the system don't just save in cash. They look for protection outside the banking system, because the banks themselves are part of the problem. Here's something that most people don't realize. Banks lend out money they don't even have. Now that's called fractional reserve banking. But every pound you deposit, the bank only keeps a fraction in reserve. The rest they can lend out over and over again. That means the same pound gets multiplied into 10, 20, sometimes even more in loans. On paper, it looks like there's plenty of money. In reality, it's debt stacked on debt. So what really happens if too many people want their money back at once? The system cracks. That's why we see bank runs, bailouts and chaos every time confidence collapses. But the thing is, while your savings sit in a bank losing value to inflation, the banks themselves are using your money to play the game. They profit, you carry the risk. Gold and silver doesn't work like that. You can't just lend out the same coin 100 times. If you hold it, you own it. And history proves it. Every time the banking system wobbles, people run back to gold. Let's look at the crashes. Every time confidence collapses, gold rises every single time. Look back in history, the 2008 financial crash, banks collapsed, people lost homes, and the market went into free fall. While confidence in paper money evaporated, gold surged. Fast forward to 2020, the world shut down overnight. Economies froze and panic set in. What happened? Gold shot to record highs. It's the same pattern again and again. When trust in governments, banks, or markets breaks, people run to the one thing they know and they can't default: real physical gold. Because here's the truth: stocks can crash, currencies can collapse, banks can fail, but gold has never gone to zero. In fact, in every crisis, it proves itself as the ultimate insurance policy. And if gold is the insurance, silver is the overlooked opportunity, the silent ninja that's ready to strike. Silver is the silent ninja of the precious metals, overlooked, undervalued, but ready to explode. Most people think of silver as cheap gold, but it's far more than that. Silver has a unique role. It's both a precious metal and an industry metal. It's in your phone, your car, your medical equipment, and it's critical for solar panels and green energy. Demand is climbing fast. Now let's look at ratios. Historically, the gold to silver ratio sat around 12 to 1. That means it took 12 ounces of silver to equal 1 ounce of gold. Today it's closer to 80 to 1. That tells you one thing: silver is massively undervalued. And the thing is, when silver moves, it doesn't creep up, it leaps. That's why so many see it as the biggest opportunity in precious metals right now. And if silver is a silent ninja, gold is still the king, which is why the biggest buyers in the world aren't you and me. They are central banks. Here's the irony: while the public is told to save in cash, central banks are quietly buying record amount of gold. Think about that. Governments print paper money, tell you it's safe, but behind the scenes, the people who run the system are stacking gold. Why? Because they know gold is the only real insurance when currencies collapse. Central banks don't hoard gold for decoration. They hoard it because it's money that can't be printed, faked, or defaulted on. It's their backup plan. So ask yourself this: if the biggest players in the world trust gold over their own currencies, shouldn't you? And that brings us to the next big takeaway. How can you protect yourself the same way they do? Gold and silver aren't about getting rich quick. They're about protecting what you've already earned. For thousands of years, these metals have outlasted empires, currencies, banks, and governments. They're not speculation, they're protection. Paper money gets weaker every year. Crashes wipe out savings overnight. But gold and silver, they are real, tangible, yours to hold. That's why I believe every saver should own some. Not as a gamble, but as a shield. I've included a link below where you can grab my free gold investment guide. Inside you'll learn the history of gold and how you can use it to combat inflation and protect your savings. And if you really enjoyed this video, make sure to subscribe. It helps us keep bringing you content that you love, straight from the bench and the vault. I'm James at Blackwell Jewelers. Thanks for watching.